Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. We got what we expected last week. The Fed announced their most recent rate hike of 25 basis points. That's exactly what everyone was expecting, but the market was way more interested in what Jerome Powell had to say about the overall economic outlook than the decision itself. During the press conference, he hinted at a few new things that could be quite telling about the future of the Fed's rate hike decisions. Number one, he mentioned that they're beginning to see disinflation in a few sectors, but not in as many as they need to in order to know that the full impact of the rate decisions are taking place. Number two, he made reference to the Fed's terminal rate being at or slightly above the 5% target as their continued effort to bring inflation back to their target of 2%. And number three, Jerome mentioned a few times that they need, quote, substantially more evidence before making a change in policy direction, which is short code for stopping the increases and considering future decreases. So the question I'm asking myself is, what are they waiting for? Because this is kind of a continued admission that they're taking way longer than they thought, which is evidenced by this follow-up doozy Jerome dropped when he said they're concerned that the longer inflation remains, the higher the chance it becomes entrenched. So which one is it? Are we moving towards a 2% inflation target, or are we worried it's going to get entrenched? Both can't happen as they are in direct contrast to one another. Their next meeting isn't until March 22nd, so we have quite a ways to wait until we get another crack at hearing their insight and perspective about where this is all really going. Nonetheless, it turns out that the first quarter of this year will prove quite pivotal in our direction economically. With that, let's take a look at what's in store for us this week. Tuesday, Jerome Powell speaks at the Economic Club of Washington, D.C., and I would expect that this will be a lot of the same things he just mentioned at his last press conference. There's no upside for him to announce anything new here because he could have said it when it really mattered last week from the podium. On Wednesday, Fed member John Williams will take part in an interview at the Wall Street Journal CFO Network Summit. Don't expect anything earth-shattering here because, once again, anything monumental should have already been stated from the podium last week during the Fed press conference. Then on Thursday, we will see unemployment claims. Unemployment has ebbed and flowed month after month, and the most recent round of tech layoffs will hit this number in waves over the next few weeks and months. So although the announcement of laying off tens of thousands of workers seems big, the rate at which all these workers get in the unemployment line is completely up to them. The numbers will reflect that. Lastly, on Friday, we get the preliminary consumer sentiment number, which has been getting better, but compared to the other data that we need to see fundamental change in, this isn't really a heavy weighted item right now. So what's all this mean for mortgage rates, Andy? Mortgage rates initially trended down when the Fed press conference happened last week, but then the market took back all that by the time Friday rolled around. So while many would like to scream from the mountaintops, rates dropped! The truth is, they fluctuated. They did drop and then bounced back some. So once again, here I am advocating that preparation is king. Moving forward, it will be imperative that you stay very close to your loan officer and the market, especially as the Fed needs substantially more evidence still. Like I said last week, days on the market are going up. Listings are having to compete with one another to vie for buyers' interest and offers. Sellers are issuing concessions in a variety of ways like closing costs, 2-1 buy downs, and other benefits for buyers choosing their home. There's a lot less buyer competition in this market, and if inventory holds steady, there will be slim pickings, but also less fighting over homes. Lastly, if you find yourself in a tough spot and you already own a home, reach out to us before the situation is unfixable. There's a lot we can do before financial hardship completely takes root. So if you are privately in that situation and need someone to talk to, reach out to your loan officer. Send us a DM, text or email us so we can help you out. And thanks again for tuning in to another Monday Mortgage Minute. Remember to like, subscribe, and turn on notifications so you see this show right when it posts each week. Share this video with someone you care about so they can win in mortgage and real estate in 2023. And we will see you again next week.